Yeah, we've got our private investor here, David Mordant. He's here to talk about his small cap portfolio, and we're comparing that against the performance of the JSE small cap index and showing that Dev is beating the market. Well, the evidence does seem to suggest, Dev, good morning and welcome. If we can look at the numbers, the raw numbers suggesting that your small cap portfolio of 8 shares is outperforming the JSE small cap index by a factor of almost 2, because yours is up 4.8% over a period of a month versus a 2.3% increase for the JSE small cap index.
Well, Godfrey, we flighted the portfolio on the 1st of March, and I think we must carry it forward and see how it does. And it also highlights how important stock selection is, because if one doesn't do stock selection, then you go along with the ETF or whatever for that, and then you're getting half the growth. So I think it's important. You must find the sectors that are sticking their heads out and showing growth, and then select the best stocks in that sector.
So it's still very much a stock pickers market, more than just running with the head and hoping that the general recovery that we're seeing will carry you along and will show some good returns.
Godfrey, it's always a stock pickers market. If it's not a stock pickers market, then buy the ETF and let it do the work for you. So if you
get half the returns.
And get half the returns.
Noted, yeah.
And get half the returns. It's always a stock pickers market.
Let's talk about what you've put in that small cap index, because if I look at the numbers here, I see we've been talking, and I do know that you favor the technology shares, and you're following that maxim here. We've got EOH, we've got Gijima, we've got Pinnacle, but amongst the top performers, it's not your favorite sector, it's Transpaco.
It's Transpaco. But the figures, the indications on Transpaco were excellent. Good dividend yield, low PE, good growth for a long time. Over the last 10 years, it's a family-owned company. Grow with the family. They'll look after their company, and you grow with them.
Maybe another day we can sit down here and talk about the merits of a family-controlled business vis-a-vis, one run by professionals.
Sure.
Not that families cannot be professionals, sure. But I'm thinking here of Pick n Pay, and I'm thinking, is Pick n Pay better off being run by someone other than an Ackerman member family? But that's discussion for another day.
Sure.
You also have EOH, you've got Gijima, you've got Pinnacle, so tech-heavy.
Yes.
How have those performed?
They've done well, and tech is sticking its neck out. It's a world of technology, and it's a world of increasing technology. If you look at the top brand in the world, Coca-Cola, breathing down its neck is Microsoft and IBM, and 2 technology shares. And I don't think it'll be too long before Google's up there as one of the world's most valuable brands as well. So it is a technology world, and one must move with the momentum.
So tech is the sector to be?
It's certainly one of the sectors to be. Yeah. I think what often gets forgotten is the Johannesburg Stock Exchange is really 2 exchanges running in parallel. One is a resource exchange, and the other is the rest. Industrials, financials, etc. And that's the first choice you have to make. Should I be with resources or should I be with the rest? And once you've made that, then you do the stock selection in that sector.
But that's interesting, because that's why Nedbank came up with that equal weighted index that they launched last week, isn't it? Because where they flattened everything and everybody's given a weighting of 2.5% market cap. Yes. Now, when you do think about it, that sort of takes out the performance of the commodity shares, because now when you look at the JSE over the month that we're comparing your small cap portfolio against, 4.8% for your portfolio, but for the JSE top 40, 7%. And of course it's been powered by the resources, up 7.2%. So perhaps you do want that growth, don't you?
You do want that growth. I mean, you don't only have to be in technology shares. Part of your investment must be in resources, and that's a question of deciding on the commodities and on the currencies. Currencies are very important in the South African commodity share prices.
Now you did say to me that you must go with sectors that have momentum. Now, which sectors have momentum now? I would hazard to guess that it's resources as well as
resources
perhaps tech.
And tech. Those are my 2 favorites at the moment. And then food and pharmaceuticals, always very steady. I think pharmaceuticals has got a lot of momentum. Although Aspen has run a long way, I think it's still got a long way to run. I think Adcock has got a long way to run, and Ciplomed is an outsider. All 3 of those in the pharmaceuticals, besides Mediclinic and Netcare, which are also 2 very well-run organizations. So I think pharmaceuticals also.
If we're going back to your portfolio, I see you also have, of course, you've got the tech stuff, the glitzy stuff, but you also have the brick and mortar stuff, Robex. Will you be looking at that composition and perhaps tinkering with it and changing a few things in there?
I don't think so. I think that the 8 shares in that portfolio I'm quite happy with, and I think I will stick with them.
Stuck for the next month.
For the next month.